everyone. This is Vishal from Equity Guru, and just update now on the Japanese stock markets on the Nikkei. In a recent chart attack video, we talked about this crucial level on the Nikkei 225, which is that 30,000 zone. I believe at the time of that video, we were talking about a breakout here and a retest up around that 29,000 zone. And well, you can see where we are right now. We are almost touching that 31,000 level on the Nikkei. And I'll just show you guys, in just a bit why this is very, very important. But the Nikkei in the last 5 weeks has just been going up, 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 and up. It all really started, of course, with Warren Buffett making a big bet on Japan, taking positions in the trading houses in Japan. And, what Buffett does, a lot of the people on Wall Street, they like to follow. He is the Oracle of Omaha, and I think he's got a lot of eyes now on the Japanese stock markets. He likes, value stocks, and Japan is perhaps the best place for value stocks. These companies that have consistent businesses, pay consistent dividends, and Japanese companies, they're known for not really changing too much, right? They sort of stay the same. And why change when they're making money and they're paying these types of dividends? Although, of course, they are now looking at other investments like EV and AI, et cetera, right? So these trading houses, it's a different type of business. We have a couple of articles in Equity Guru where you can take a look about that business model because it is very unique from other places around the world. Other reasons why money's looking at Japan, there's of course that weakening yen, right? With the central bank, the Bank of Japan, keeping interest rates at negative 0.1%. And the new Bank of Japan governor, who just came in, a lot of people were thinking he might surprise markets and lean a bit hawkish. But he said, what we're going to do is we're going to do a review of monetary policy. And this review is going to take us about a year and a half. So, pushing everything down the road there. And essentially, a lot of people are seeing this as Japan just keeping rates normal, and then by a year, or keeping rates at where they are, not normal because they're negative. And then down the road, when other central banks begin cutting interest rates because of, say, an economic slowdown or a recession, that is, of course, if inflation doesn't surprise to the upside and keeps going higher, if there is an economic slowdown and a recession, these central banks will start cutting interest rates. And then the Bank of Japan can say, hey, look, we're going to keep rates at low because the economy is slowing down. So they're buying themselves some time. And a lot of people are sort of saying that the weakening Japanese yen is going to mean higher Japanese stock markets because, of course, a lot of people know that there is that huge gap between interest rates, between American and other Western nations and Japan, which offers some opportunities. But there is also that idea of Japan being major, exporters, right? So that they export a lot, and with a weakening yen, it means a lot more countries will look and export more Japanese products, which helps exporter shares, because it increases the value of overseas profits in yen terms when those Japanese companies repatriate their profits to Japan. And, you're already seeing the beginning of this, right? Corporate profits have been huge. Companies like Shiseido jumped 4.5%. They're a cosmetic maker, beating consensus estimates and posting a 97% jump in net profit for 3 months ago. Of course, you guys probably know about that beer maker, Asahi Group. Quarterly net profit grew more than 4 times. Uniqlo. So, there's a lot of these retail companies or Japanese retail companies now coming to the West, but Uniqlo is a popular clothing brand. Their brand owner, called Fast Retailing, rose 0.7%, which was actually one of the largest boost to the Nikkei index there. So, positive earnings, weaker yen, which means more Japanese exports are helping boost the overall Japanese stock market. And then, of course, you have Warren Buffett, who, when he, does something big, or when he invests overseas and presents this, opportunity, because let's face it, I mean, how many times have you heard on, say, financial media, about major funds or a major investor investing in Japan. You don't really hear that too much, right? So I think, Buffett is definitely getting more eyes and institutional eyes and retail trader eyes, whatever, onto the Japanese stock market scene. And Japanese GDP, believe it or not, but their economy, their GDP beat first quarter estimates. So Japan's economy grew by 0.4% in quarter one, which is actually, double the expected 0.2% growth rate. I know we're not talking Chinese level or, GDP, but it was still a surprise. And of course, when you see these type of estimates, the markets react, right? So the upbeat performance was actually driven by an increase in tourism and also domestic household spending, which is very important because Japan is one of the largest, if not the largest, saver nation out there. So back to the tourism part, you're seeing increased profit in service sectors such as restaurants and hotels because of this private consumption base. And when you look at that compared to analyst expectations of a slowdown in Europe and the United States, the Japanese economy is showing some resiliency here, and perhaps more money might go away from the US and from Europe if they are expecting an economic slowdown. Because generally, when you have a recession or a slowdown, it means those companies aren't making profit, and you expect the stock markets to drop, right? To drop lower. So putting it all together, supportive central bank policy, strong earnings, and a resilient domestic economy, plus a Warren Buffett pick, right? So a lot of headwinds here for Japan. I talked about that 30,000 level, and just this week I posted this article about this near 20-month highs, right? So we closed above 30,000, very, very important zone. But as you guys seen on the Nikkei here, we hit 31,000. And some of you might not believe these headlines, but the Nikkei powers to 1990 bubble era high. I'll show you the charts in just a bit. NASDAQ breakout sees, I don't know why they're bringing the NASDAQ there, but the Nikkei pushes to new 33, yes, 33-year high. If you zoom out on the Nikkei, and I've done this, in other chart attack videos with this trend line here, you have to actually go on like a monthly chart. Because the previous high in the Nikkei is that 1989, 1990 sort of period right there. So you can see we're not even near the all-time record highs. There's still about 8,000 or so points that we can go, to make those or to test previous highs, not make new record highs, but that could be the next step if we actually do break above previous record highs. And you can see that this break here is, I think it's going to be quite a crucial one. I've talked about in my chart attack videos that if you get a close above this 30,000 zone, just because it's a nice number around this resistance area, I think you're going to see a lot of sort of funds and maybe even, like I said, the retail crowd, but more particularly the institutional crowd, because, let's face it, they're going to be moving these kind of things. They're going to see this and they're going to see it as a major breakout here. Looking good so far, but what I will caution is that this trend line that I have is on the monthly chart. You do have a breakout here, but this monthly candle will not close until we hit, the end of May 31st, right? Yeah, there's 31 days in May, so until we hit May 31st. So I mentioned that because look at these candles here. This one was in September 2021, and you had a few other candles here in 2021 where, again, these were full green-bodied candles, right? Looking like they would break out above previous or recent highs here, but instead we saw a sell-off, and we did not get that confirmed candle close. So keep an eye out on this 30,000 level. We have already had a break, but I think the key trigger will be if we get confirmed a monthly close above 30,000. Other ways to play it, of course, is, go to that weekly chart. What we can expect to perhaps see is maybe a bit of a pullback before we continue to shoot higher. But me personally, I wouldn't be surprised if that retracement doesn't actually come right away. And, we see a bit of a push higher in the Nikkei, just on the momentum that's being built because of the Warren Buffett pick, and also the fact that this major technical level has been taken out. And like I said, I think other big money and perhaps even algos might be seeing that, which might cause a bit of a I don't want to see FOMO, but a bit of a momentum rush, right? And you can sort of see that already on the daily chart, where we've already had some of these gap ups there, because it's quite important. So on the daily chart, as we're closing this week, we have this doji candle, which is generally seen as this battle between the bulls and the bears. So there is a possibility that we could get, as I said, as I showed on that weekly chart, a bit of a retracement before we go higher. But a doji candle just in the middle of nowhere like that is not necessarily just a sign to sell, right? Although you can see, the past dojis here have had a bit of a sell-off here. We had another doji here, a bit of a sell-off. Although look at some of these dojis here, just a little bit of a sell-off before we move higher. But major technical breakout on the Nikkei, and it is potentially in store for close above 30,000 on that monthly chart, which means that we will be, believe it or not, but we will be expecting, maybe in the medium term to long term, the Nikkei to retest previous record highs around that 39,000 zone before making, new record highs, right? That's just what I'm seeing here on the charts. I'm not saying that's going to happen next week or anytime soon. But if we have that close on that monthly chart, that is confirmed. Expect to see a move back up to previous all-time record highs, and then potentially a breakout into new all-time record highs. And I think that's very interesting, given the monetary policy we're seeing in Japan, the economy there, and it might just change things up. When you're talking about investing in Asia and where to invest in Asia, right? Of course, a lot of people like the China trade, although you can't really invest in Chinese domestic markets. You can invest through Hong Kong or through Singapore, but of course, a lot of people are seeing some issues in Hong Kong because of the protests and the CCP sort of slowly encroaching there. So I think this is very fascinating. I like to look at international money flows, and you're clearly seeing money flows look to Japan, and of course, Warren Buffett, the man who started it a few weeks ago, and now traders and institutions, perhaps in the US and Europe, are following the Oracle of Omaha. That's it for me, folks. Let me know in the comments below what you guys think about this Nikkei chart. Are you surprised that potentially we will see new all-time record highs in the Nikkei, taking out those highs in 89 and 1990? Or do you think this is just going to reverse and we see a big breakdown below 30,000? Quickly mentioning the recession. Of course, if Japan does export a lot, a recession would hurt the Japanese economy as well, because other nations in the West wouldn't be exporting as much, which means those profits might not do so well, right? So are you guys on that stance, on the recession stance, or do you think that this is going to be a big value play led by Warren Buffett himself? Be sure to give this video a thumbs up. Be sure to subscribe, and I'll see you guys all in the next chart attack video.